Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is Adam Welch with Insurance Agency Marketing Services. Thank you so much for joining us here on this fine Monday morning. Do appreciate you taking some time out of your day to hear from us here at Insurance Agency Marketing Services. Joining me today, I have Chris Martin and Kristen Geyer from John Hancock, and they're going to be taking us through some exciting things going on with John Hancock, some of their new riders they've introduced, and some strong selling features with their products, including their new critical illness rider, chronic care, long-term care rider, and then their vitality program with their healthy engagement program. So a lot of great things to talk about with John Hancock from obviously a very well-known name and a strong company out there. So feel like we have a great presentation put together for you. Before I get going and hand things over to Chris and Kristen, want to take a couple of moments here, just touch on a couple of housekeeping items. If you do have any questions throughout the course of the presentation, please don't hesitate to type those in your question box on your control panel and send those over. Be glad to stop and check for those questions and check for those questions at the end to get those answered for you. Additionally, we are also going to have 2 poll questions throughout these first introduction slides. Your participation in those poll questions certainly greatly appreciated, helps us get more relevant information out to you for some items that may be of interest in learning more about. So those poll questions will be coming up here shortly, but again, your participation is greatly appreciated. With that, again, before I hand things over to Chris here, just want to make sure everyone's well aware, because I always see some new faces, new names here rather, on these webinars and familiar names. So I want to make sure everyone's well aware of the great services and rewards and incentives we have available to the independent advisor here at Insurance Agency Marketing Services. And starting out, I want to talk about a couple of very strong business builders. First one is our Referred Producer Bonus Program. So just like you all out in the field, the most qualified lead you can receive, the highest compliment you can receive, is a referral from an existing client or someone in your network. It means you're doing a good job for that client. They want to make your services more well known to their network. The same holds true for us here at IAMS. The most qualified lead we can receive is a referral from you doing business with us. That tells us that we're doing a great job for you and you want to spread the message about IAMS. So we want to encourage you to make those introductions and pass those referrals along to us. And how we do that is through this Referred Producer Bonus Program. So anytime you pass over a referral to us, we're going to cut you a check for $50 immediately once they contract with one or more of our carriers. Once that referral starts writing business, you're going to get at least a $100 bonus when they write their first case, or more, depending on that business. So just some rough numbers how this program works. Basically, we're going to pay you a 20 basis point override on the business that your referral writes, as long as you're both contracted and that referral is writing business with us here at IAMS. You're going to get that 20 basis point override. So you can see in that example on the screen, really can add up to some significant cash, extra cash in your pocket. So if you were to refer over 3 producers to us, and they were all $3 million a year producers each in life and annuities, that would equate to another $6,000 cash in your pocket just by making that introduction and passing them along to us here at IAM. So great opportunity to get some additional cash in your pocket with that Referred Producer Bonus Program. Do want to point out that bonus is not coming off the top of your referrals commission or your commission. That's coming out of our pockets directly to you, again, as a thank you for making that introduction. So please keep that program in mind. A great opportunity to earn some more cash just by passing names along to us. So we do value and appreciate any referrals you pass along. Additionally, we do also have a great marketing reimbursement program, and this program is set up to where we will cost share in the marketing expenses that you incur out there. So if you're a contracted agent with us and writing business with us, you're accumulating cash in that marketing reimbursement account. Rough numbers again here: every $100,000 in premium annuity or single premium life, for example, we're going to set aside $200 in marketing reimbursement funds for you. And that is your money to use how you see fit, as long as it's business related and geared towards marketing yourself and building your business. If you needed new business cards, you do a seminar or a client appreciation event, send us the receipts for those items that you'd like reimbursement on. We will cut you a check for up to half of those expenses based on what you have in that account. So again, a great way to potentially cut your marketing expenses in half based on the level of business that you're writing with us here at Insurance Agency Marketing. So a couple of great programs there. Get some additional cash in your pocket and cut your marketing expenses potentially in half. All right, our new producer bonus. This is for those of you producers that are new to us here at IAMS. So how this program works, we have 3 different tiers that you can choose to cash in on based on the level of business you write with us in your first 6 months of getting contracted. So this is encompassing everything from life insurance, single premium life, annuity business. Do prorate those numbers for target life premium on the traditional life insurance side. But just taking you through here quickly, we do have, as I mentioned, 3 different levels to choose to cash in on based on the business you write in your first 6 months. So if you hit that $100,000 level, you have those 3 options to choose from. The first of which, and most popular, is going to be that $750 cash bonus. You can also choose a 2-year subscription, 2-year paid subscription by us here at IAMS for your own producer website or the latest generation iPad. If you have over $100,000 in business and can hit that $300,000 level, of course the rewards go up from there. I do have a Social Security marketing program and Social Security claiming program that comes along with the 3,000 piece mail drop. Help get some additional leads in there. Boost that marketing reimbursement account with $2,000 in marketing reimbursement dollars, or that $750 cash bonus goes up to a $1,500 Visa gift card. If you can write more than 300 and hit that $500,000 level in your first 6 months, really have some tremendous business building rewards here. So you can, if you want to get into seminar marketing, or maybe you're already doing seminars and want a different approach, 2 of our top producers, Matt Gill and Dave Pimper, have really built their business around seminar marketing. They use seminar marketing in their daily production to generate their new leads and their new business. So 2 different seminar approaches, both very effective. So you can choose Matt Gill's seminar system that comes along with some fantastic coaching and a 5,000 piece mailing to fill that room. And you could also choose Dave Pimper's seminar system. Again, very effective seminar, different approach than Matt Gill, but you can choose his seminar system with fantastic seminar coaching and a 4,000 piece mailing to fill that room. Alternatively, if you wanted to just take a vacation and get some rest and relaxation, you can customize your own vacation with our Ritz-Carlton travel package. So that's our new producer bonus. Again, rewarding those of you new to us here at IAMS for the business you write in your first 6 months with us. Back office support, this is really where we hang our hat. It's going to be on service to the independent agent out there. We know your job is not hard out there. There's a lot that falls on your shoulders being an independent advisor. So our mission here at IAMS is to help you work smarter, not harder, be more efficient out there in the field. So we like to provide what we call submission to commission support. So everything from sales support perspective and helping you with case design on the life or annuity side, product selection, running quotes for you, helping you out on everything from the sales support and pre-sale side to getting the forms out to write the business. Once that business is written, you submit it back into us. We have a very talented team of case managers that are going to scrub and review your apps to make sure they're going to be in good order before they hit the carrier to cut down on processing time. If you're writing a fully underwritten life case, we'll actually schedule the exams and labs for you if those are required. And then our case managers will follow up on the business on a consistent basis. You'll get regular updates from the case manager on that business, keeping you in the loop, pushing the carriers along to make sure that that business is getting processed as quickly as possible so we can get you paid as quickly as possible. So that's our submission to commission support that we provide here. Again, number of other services you can see on the screen there, but again, our whole goal is to help you be more efficient out there in the field and help shoulder some of that back end, back office tasks that fall on your shoulders and help you be more efficient. And Kristen or Chris, I think we might have some hold music there. Apologize for that, everybody. Moving on here, we do have a full creative marketing team here that can help you with everything from some of these turnkey solutions to full agency solutions. So very talented team. Tasia Peterson, Josh Treecarton in our office, they do a fantastic job in this area. So we want to help you market yourself, get your message out there, and get you in front of more people. So we have a number of solutions here on the creative marketing side, from the turnkey solutions that are professionally written, ready to go out, just need to pop your information in, and they're ready to be printed, emailed, mailed, whatever the case may be, however you want to use those materials. We can help you with building your brand, building your business, and building your image out there. So help you with logo design. Maybe you need to rebrand. We'll work with you to get a new logo, new brand message out there, get that put on new business cards and stationery and advertising materials. And we can also help you on the digital front as well with different online marketing pieces, from email marketing, website development and hosting for you, and social media marketing. So a lot of areas that they work in. They do a tremendous job out there. If you'd have interest in learning more about any of these solutions, I encourage you to give us a call and ask to speak with Creative Department. Josh or Tasia would be glad to visit with you in a bit more detail about what we can offer you there. Our website, very quickly, www.iamsinc.com. A lot of great information available on our website. Of course, it's going to be available 24/7. It's online. If you've not yet gone out to register for the website to get access to the back end, I highly encourage you to go out there and do so. A lot of great information from our term quoting engine. Our current life and annuity product grids are out there. We have a significant sales resource library that just has a wealth of information out there, everything from some unique fact finders to client presentations and scripts and calculators. A lot of information in that sales resource library that is all available to you upon logging into our website. So again, if you've not yet registered, I certainly encourage you to go out there and do so. Again, that's www.iamsinc.com. Our retirement analyzer software, we do make this available to contracted agents with us here at IAMS. Really a powerful piece of software that really helps illustrate to your clients and prospects the power of working with you and implementing your recommendations. It really really shines a light on the impact that your recommendations are having on their overall retirement plan and their risk protection needs and those items. So really designed and developed to answer those 6 questions you see on the screen. Marcus Solar in our office works in the annuity marketing department here at IAMS. Wealth information here. He's kind of the point person for the retirement analyzer. If you'd have more information and learning how this can be available to you and how to get up and running with it, certainly encourage you to give us a call and ask for Marcus to visit about the retirement analyzer software. IAMS Wealth Management. This is going to bring us to our first poll question of the day. And just very simply, would you be interested in learning a bit more about IAMS Wealth Management? But we can no longer assist you with just your life insurance and fixed annuity and index annuity business. We've added a third arm of our business here, and that is IAMS Wealth Management. That is in the fee-based asset management arena here. So if you've been considering getting into this area to add a bit more of a holistic approach to your business for your clients, to not only help your clients with their insurance and fixed income needs, we now have a pretty streamlined and simplistic model for you to consider adding to your business for that fee-based asset management. May sound complicated, but we've really taken the necessary steps to make it as simplistic and straightforward as possible to implement successfully in your business. So a number of reasons to consider getting into the fee-based asset management business if you haven't already. One is going to be increased revenue. So instead of the transactional based side of the business with your insurance and annuity sales where you earn commissions, with the wealth management side, you're earning money management fees. So all the assets that you have under your management, you're going to earn fees on those assets, and that's going to be recurring revenue. So you're going to build up a stream of recurring fees, a bit more predictable and stable income. Again, taking it and diversifying from some of the commission-based side and generating those fees. You're also going to likely see an increase in your insurance and fixed business as well. Again, being more of a holistic advisor, you can help your clients with more of their concerns, more of their wealth accumulation, wealth protection needs. Going to be able to help them with more of their insurance concerns as well. Improve client retention. Again, being more holistic, you're going to be able to help them with larger portion of their concerns. Instead of seeing some of the wealth management business roll down the street to the next advisor, you'll be able to keep more of their wallet, so to speak, and help them with more of their items, tying them closer to you. And that's going to go a long way into strengthening client relationships. The key word here is holistic and being more well-rounded advisor for your clients. So we have put the partnerships in place to make this as streamlined as possible. The same goal of helping you be more efficient out there in the field holds true with IAMS Wealth Management. So all of the back-end compliance concerns and actual management, fund management items falls on us. It doesn't fall on you. So we'll take care of all of that from an operational perspective, while you can focus on the things that matter most to you, and that's going out, meeting with prospects, meeting with clients, building those relationships, and making sales and gathering those assets. So we'll take care of all of the back end compliance and actual money management details with this. So if you'd like more information, certainly click yes on that poll question. We'll get some additional information out to you. And Mike Hansen on the wealth management side, be glad to reach out to you as well to visit a bit further. But with that, I'm going to go ahead and close out that poll. Thank you very much to those of you that responded to that. We will get some more information out to those of you that responded yes. All right, our Life and Annuity Academy. This is going to bring us to our second poll of the day. Very simply, would you be interested in learning more about our Life and Annuity Academy? This is certainly not a commitment to attend one of these meetings, but it will just get you on the list to keep you informed of future dates as they come available, and keep you up to date on how we can get you out to one of these meetings. Folks, these are tremendous 2-day training meetings where we bring you out. It's all expense paid, so we take care of your flight, hotel, meals. All of that is on us. It just costs you 2 days out of your time. And we know that 2 days, that's expensive in and of itself, because it's 2 days you're not out in the field making sales and building those relationships with clients and prospects. So we want to load you up with as much information as possible. I'll say this is unlike any other training event you may have attended out there in the industry before. We continually get that feedback from every one of these meetings. It's not a product roadshow, folks, where we're going to bring in only carrier reps to talk about here's product A versus product B and why you should sell this product over that product. This is geared more towards sales and marketing and giving you some ideas and sales concepts and sales tools that you can incorporate into your business and see a measurable increase in your life and annuity production. So we bring out several of our top producing advisors with us, Matt Gill and Dave Pemper, that I mentioned on the new producer bonus slide. They'll be out there going over their seminar system and talking about seminar marketing and how it's working for them, why they continue to use seminar marketing. And they'll go into a little bit of detail about their specific seminar systems and actually make that available to you if that would be of interest. Of course, go over different industry topics like annuity threats and trends to the industry, talk about large life case marketing, so taking a step further to get you in front of some larger premium life cases, including your business insurance concept, so your key person, executive bonus, buy-sell arrangements, those types of concepts tend to be a little bit larger premium sales. Talk about ways to get you in front of those cases. We'll also spend a decent amount of time talking about wealth transfer strategies and wealth transfer tools from a single premium life perspective. We'll also touch on some different software tools, including the retirement analyzer mentioned briefly here as well. So a lot of information crammed into these 2 days. Again, it is all expense paid. It just costs you 2 days out of your time. If you'd like more information on how to attend one of these meetings and like to be kept informed of future dates, encourage you to click yes to that poll question. We will get some additional information out to you. But usually hold 3 or 4 of these meetings a year, and just wrapped up our first meeting, which was another strong success. So looking forward to future dates and seeing more of you out there. So with that, I'm going to go ahead and close out that poll. Thank you again to those of you that participated in that poll question. Final item I want to touch on before I hand things over to Chris Martin here is going to be our 2019 Marketing Summit. Recently wrapped up our 2018 Marketing Summit. Really a tremendous meeting. Took advisors out to the Boulders Resort and Spa in Arizona. So we are working on details for the 2019 Marketing Summit. The invitational period has begun. It started January this year, and it runs through June of next year, June 2019. So we will keep you up to date on the details of that meeting as they become available, but we do have our 2019 Marketing Summit in the works, and already getting folks qualified for that. So keep that in mind. With that, I am going to go ahead and wrap up my end and hand things over to Chris Martin with John Hancock. So let's see here. Give me just a moment. All right, hopefully I'm getting the right one here. Anything make its way over to you? There we go.
Perfect. Yep. I think we're off and running.
Perfect.
Does that look okay?
Yep, we can see your screen. We should be in good shape.
Sounds great. All right. Well, Adam, hey, I appreciate it. Thanks for the opportunity today to talk with everybody a little bit about some of the fun and exciting things that we have going on at John Hancock currently. As Adam mentioned, I'm Chris Martin. I'm the Regional Vice President with John Hancock. Actually out of Kansas City, but I cover a handful of states here in the Midwest, obviously Nebraska being one of those. So anybody that works with IMS here out of Nebraska, then they would obviously be able to work with our office. I also have Kristen Gayer on the phone. She's one of my internal sales specialists, and she's on the phone as well today to listen in and potentially add a few comments as we go along here. So what we're really going to talk about today is take a little different approach and talk about just some of the exciting new riders and living benefit opportunities that we have with John Hancock. Specifically, our brand new critical illness benefit rider, not to be confused with a chronic illness rider. It is strictly a critical illness benefit rider. And then obviously our very popular long-term care rider. We're going to talk a few minutes about that. And then also finalizing kind of things with our Vitality rider, or what we also call our Healthy Engagement benefit rider, that's been out for about 2.5 years now. And hopefully everyone on the phone has at least heard of it and heard of our partnership with Vitality and some of the things that we're doing on that front. So with that being said, we'll just kind of jump into the presentation and go from there. You can see today's agenda, as I kind of mentioned. So we're going to kick things off with, again, our brand new critical illness benefit rider. And there's, good news and bad news as we talk about critical illness, specifically as it pertains to statistics here in the life insurance world. The good news is that many illnesses now that were once considered fatal are highly treatable, and patients often recover. These things being, cancer, stroke, sometimes organ failure, heart attacks, different things like that. The bad news, as we are able to live with some of these impairments, is that the cost of survival can be very expensive. And talking to clients about how we can help plan for this type of a risk can be very beneficial to your clients. As you can see, the risk here is that as you think about your own clients, I'm sure this becomes apparent, nearly 40% of people will be diagnosed with some form of cancer alone in their lifetime. And again, as I look through some of my friends and family, that number is very telling, in that we've got a lot of people, and our clients included, that will have some sort of cancer diagnosis at some time. And the number of people living beyond a cancer diagnosis in 2014 reached almost 14.5 million. So the market is certainly there for folks that are, again, living with some of these risks. And the consequence of this, if someone does have a cancer risk or a heart attack, certainly loss of income because they potentially might not be able to work. So, how do we supplement those lost wages? Obviously there's gaps now in health insurance coverage. How can we help supplement those gaps to help pay for the high cost of medical bills and expenses that they may have? And that's exactly what this critical illness benefit rider does. It actually pays a one-time lump sum amount, and it is income tax free. The benefit can be up to $250,000, and again, covers critical illnesses such as heart attack, certain types of cancers, strokes, organ failures, again, all these things that would fall under the definition of a critical illness. It does, as I mentioned, preserve the death benefit. So this is not an acceleration of the death benefit. It is actually a one-time lump sum that would be paid out in addition to the full death benefit, therefore preserving that full death benefit for policy beneficiaries. And obviously this can go to help cover and supplement retirement assets, such as, if we have a loss of income, or help pay for day-to-day expenses that may be incurred due to this critical illness. Again, this is now available on both of our IUL products, our protection-based IUL product and our accumulation-based IUL product, and then also on our brand new Protection UL, which is our current assumption, interest sensitive universal life product. And then as we reprice other products in our product portfolio, we will continue to add this rider to those products. You can see here issue ages 18 to 65, and this really is a benefit that is meant to cover that critical illness specifically during the working years. So it will fall off the contract, and the charges will also cease at age 65. So and again, as I mentioned here, it does cover cancer, heart attack, stroke, coronary artery bypass graft, kidney failure, major organ failure, paralysis. And again, if after this, we can certainly follow up with anyone who would like to see more information on this. We have a technical guide that gets into all the specific definitions that can really help educate you, so that way you can pass this on to your clients and let them know exactly what will and will not be covered. As I mentioned, income tax-free death benefit, and then crucial 30-day waiting period from the time the policy and the rider goes into effect. After that, then the rider would pay out. The client has a choice at issue to choose 10% of the policy's total face amount, or 25% of the policy's total face amount, as I mentioned earlier, all the way up to a maximum amount of $250,000. The rider charges, as I mentioned, terminates at age 65, or if the rider were to pay out, whichever happens first. And the rider charges, there is a cost for the rider, obviously. Gets actually less expensive as clients get older, because we're not covering it for as long of a period. So the charges for the rider will be more expensive on a 45-year-old than on a 60-year-old, for example. But the charges are commissionable, so that's something to keep in mind as well. And then we have several different risk classes available for the rider specifically. So this is something that's, again, pretty new for us here at John Hancock. We've seen a lot of great interest, a lot of discussion around our critical illness benefit rider, and something that we think is we're very excited about. Here's how the rider works at issue. And again, this is a pretty self-explanatory rider, I think, but we'll just kind of walk through real quickly how it would work, not only at issue, but also at claim, and then also following up there at death. So the client would go ahead and apply for, in this example, we're using a Protection IUL product, which is one of our low-cost index-linked products, very competitive in the current landscape. And we would go ahead and add, for example, here a 10% critical illness benefit rider on a male who's 55 years old, preferred non-smoker, $1 million death benefit, and then what we would do here is just solve for this policy to endow at lifetime based on 6% interest credit. And again, it's our IUL product. So they purchase the policy. They would have to go ahead and select the 10% critical illness benefit amount at issue. That amount then would obviously give them the $100,000 lump sum tax-free benefit that would pay out if a critical illness should happen. And again, you can see cancer, stroke, heart attack, that type of thing. So that's how it looks at issue. Once it goes on claim, in this example, 3 years later, the same client is diagnosed with one of those covered critical illnesses. This would just go ahead and pay out that lump sum, again, income tax-free payment of $100,000, separate from the death benefit. So then at death, at age 85, the same client passes away. The full $1 million death benefit would be paid out, so total policy benefits to this insured would be $1.1 million. Again, fairly self-explanatory, but I think sometimes it helps to see how that kind of works out. So shifting gears a little bit, we'll also talk today about our ever-popular long-term care rider. Now, this is something that obviously that we've had at John Hancock for a number of years, and we've actually seen, we for a number of years also have had standalone or traditional long-term care insurance. We do not offer traditional long-term care anymore, and since we haven't offered long-term care insurance anymore, our rider with our permanent policies has become more and more popular for obvious reasons. And we really believe right now that if you're not talking to your clients, especially those that are 50 and older, about long-term care coverage, this is a great opportunity and a great time to do so. As you can see, we all know the statistics, but 70% of people over age 65 will at some point require some type of long-term care service, whether that's home health care or they'll be moved into a nursing home. So this is affecting obviously a lot of people. And you can see here 78 million baby boomers will retire over the next 2 decades. The market here for a long-term care discussion is really ripe. And obviously when you talk about the expensiveness of long-term care coverage, on average, and sometimes it could cost in different markets as much as $94,000 per year. A lot of times the conversation could go something like, if something were to happen, which of your retirement accounts or which of your bank accounts or wherever should we liquidate to go ahead and help pay for or supplement long-term care costs that you may incur. A lot of times clients don't like to have that conversation. It's a very uncomfortable conversation, but one that they definitely need to think about, because this can really deplete their assets very quickly. If they have another tool that they can tap into, such as their life insurance policy to help supplement that long-term care or pay for it, we're finding that obviously clients would typically much rather do that. So how does our long-term care rider work? Ours is a little different in the marketplace in that it is a true long-term care benefit. It is tax qualified. It automatically will turn the full death benefit into a long-term care benefit pool. And some of the nice things about our rider, while you can select a monthly benefit amount of 1%, 2%, or 4% of the death benefit to accelerate on a monthly basis, you can actually, we can select anywhere from 1% to 100% of the initial face amount to be accelerated. So for example, if we had $1 million policy, but we don't need the full $1 million of long-term care coverage, we could actually select 50% of that face amount to be what we consider the long-term care pool, and then we could accelerate that on the 1%, 2%, or 4% basis. So it gives us really a lot of flexibility and a lot of unique ways to design not only the life insurance policy, but also this living benefit and this long-term care rider. And then ultimately, obviously, this overcomes the typical pushback when we're comparing this to a traditional long-term care policy, and that clients a lot of times feel if they pay those premiums into a traditional long-term care policy, but what if they don't need that? What if they don't go into a nursing home? What if they don't need home health care? Then that policy, those premiums, they would kind of consider that a use it or lose it benefit. If they don't use it, they would just lose the benefit. Whereas with our long-term care rider, if they're not using any of their long-term care acceleration, then it would just pass on to the next generation, tax-free and in a tax-free life insurance death benefit. Obviously, the strength of John Hancock, we have been doing this on the traditional long-term care side for a number of years. You know that we've paid out $4.7 billion in insurance claims on the long-term care side, and that's to over 80,000 claimants. Obviously, we're still paying out. We're still managing that block of business, although it's not open for new sales, and still paying out a very, very hefty amount of claims on a monthly basis. And really, the reimbursement model, it's very different from the indemnity version. Many carriers who have a chronic illness rider, which would be comparable to this long-term care rider, would use the indemnity version, where once a client goes on claim, they would just pay out the full monthly benefit amount, whatever that amount was. With our product, with our rider, we actually use the reimbursement model. So we actually, if the expense covered, let's say the monthly maximum benefit amount that can be paid out of this policy, just to pick an example, is $5,000, but the actual amount to be reimbursed, the actual amount that the facility needs to collect that month is $2,000, then John Hancock will just pay that facility direct the $2,000. The remaining $3,000 would just stay in the policy for later acceleration. You don't lose it, it would just stay there, and it would allow that benefit period the amount of time to be extended. We feel like this actually helps those costs go directly to what they're intended for, which is that long-term care coverage. The other thing about the reimbursement model is it really helps to keep the costs down. So you'll notice if you're comparing us to other carriers, and if you add their chronic illness rider versus our long-term care rider, typically it is less expensive. The other thing too is that the other chronic illness riders, if it's an indemnity version, it's typically restricted by the IRS per diem limits. So therefore, if you go above and beyond that, it could become a taxable event. Whereas at John Hancock, we can actually accelerate up to $50,000 per month, and it's a complete tax-free benefit. So on some of those larger policies or the larger monthly acceleration amounts, our long-term care rider can actually be beneficial. The other thing that I wanted to mention very quickly is that many of our competitors talk about how the reimbursement model, clients would actually have to pay the facility and then collect those receipts, turn them into John Hancock, and then we would reimburse. While we can do it that way, about 80% of our claimants actually don't do it that way. We have what we call a long-term care coordinator that actually at time of claim will actually work with the facility to pay the facility directly. So we actually take that whole claims paying process off of the shoulders of the family, and that is something that most of our claimants really enjoy. And producers who have sold our rider over other products really enjoy kind of that hand holding and that custom care. Again, we do underwrite for the long-term care rider up front, so therefore we don't have to, it's dollar for dollar acceleration on the back end. There's no extra hidden charges. There is a small charge. Typically, it increases the premiums by about 7 to 8%. So less than an indemnity version of this type of chronic illness rider. Our long-term care rider is less expensive. Again, I mentioned the favorable tax treatment. The rates of our rider are guaranteed not to increase. That is contractual and written into the contract. And then obviously because of our amount of claims that we've paid out, we have great claims support and experience. And as I mentioned, typically less expensive than most other riders are out there. We mentioned that you can choose and you can kind of pick the amount of death benefit you want to be accelerated in the form of a long-term care pool. We can really kind of customize that to different client situations, and we can actually include the long-term care rider on policies over $5 million. So we could actually write a very substantial, very large life insurance policy, and then and add our long-term care rider to those. We do now offer it on an option 2 basis. So we could, if we're doing some of those accumulation type solves on more of an accumulation type product with an option 2 death benefit, we can now add our long-term care rider on an option 2 face amount solve. And then we also recently have added the ability in our illustration to actually show how that claim process would work in our illustration, and it would actually show the distribution and the acceleration, I should say, of the death benefit once it goes to claim. So a couple new things there that we've now added, and again, we can certainly show and help anyone who would like to learn more about this and kind of see how this works in action. I like this slide because it just kind of shows the different companies that are out there that do have some kind of either chronic illness rider or long-term care rider, and the differences between. And you can see John Hancock on the far right-hand side. We are one of the only reimbursement models of rider out there. The definition, while the definition is the same, cannot perform 2 of 6 activities of daily living or cognitive impairment. You can see that with more of a chronic illness type rider, condition must be permanent, and you do need annual recertification for those riders. They are also all subject to the IRS per diem, as I mentioned earlier, which limits that monthly amount that they can use or daily amount that they can use, whereas John Hancock's rider is not restricted to that, and our rider charges will not be taxable. So, and again, the cost of that rider is guaranteed on John Hancock's perspective. Okay, so now we'll switch gears one more time to our third and final really, living benefit, and something that we think is just bringing a lot of value to clients. We've been at this now. We partnered with Vitality about 2.5 years ago to bring to market in the United States the Healthy Engagement Rider. So I'm going to talk for a few minutes about this, and then I'll show you how the best part of this is we can actually offer all 3 of these riders together. So And again, I realize some of you on the phone may have sold a Vitality rider, so for that, I appreciate it, and we thank you for that. Some of you may have never heard of it, so I'll try to make my conversation as high level as I can, so that way everybody can get hopefully a little something from this. And again, this isn't necessarily meant to make you an expert on any of these riders. We can certainly take that time after the call to dive a little bit deeper into any of these. But really, what is Vitality? Well, we partnered with a company called Vitality out of South Africa about 2.5 years ago to bring to market in the United States what we think is just a smarter approach to life insurance. What it does is it really rewards clients who engage with us at John Hancock and show us and prove to us that they're living a healthy and active life. By doing that, they get a couple different things. One is they can save up to 15% on their life insurance premiums, because if they are healthy and active, we want to reward them for that. So we actually will go into the policy and give them credits towards their cost of insurance. So that's actually going to bring down their cost of insurance, therefore saving them money on their life insurance premiums, which who doesn't want to save some money? And then on top of that, we've also partnered with a number of retailers. And quite frankly, the more that you do from an engagement standpoint, the higher your status and the higher the rewards are going to be with a number of different retailers that we've partnered with, such as Apple. We've partnered with them on their Apple Watch, their newest one, the Series 3, where clients can get that for as little as $25 plus tax. And I'll get into that a little bit further as we go down. We give every Vitality member a complimentary Fitbit, what they can use to track their steps on a daily basis and to engage with us on that. We're also saving clients up to $600 on healthy food purchases. Again, I'll talk a little bit more about that in a minute. And then it's really a program that's optimized for older individuals, not just for the younger aged folks, where that's probably where you're kind of thinking that might go directly to millennials and that type of thing. But we've proven and shown over the last 2.5 years that older insureds really like this program because they like to be rewarded as well. And then obviously we have entertainment, shopping, gym discounts, hotel discounts, cruise rewards, all kinds of great things the clients are taking advantage of. As I mentioned, we partnered with Vitality. It's a South African company. They've been at this for about 20 years in 15 different markets across the world, across the globe. So they are kind of the global leader in this adding of a wellness benefit to life insurance. But no one had brought them to the U.S. In the life insurance arena. So we decided to partner with them 2.5 years ago. We signed a long-term exclusive deal. So that's where you won't see any other of our competitors, for now anyway, jumping into this market in the U.S. with Vitality. They may try to do it with another company like Vitality, but nobody's going to do it with Vitality unless we license it to them, which at this point we're not interested in doing. But you can see Vitality has over 5 million members in 15 markets. You can see on the right-hand side here, it's now our #1 selling rider, so it's outpaced very quickly our long-term care rider, which has been very popular, and it's available on a number of products that we have, both term and permanent products. And it really does deliver more value. We think that from a producer standpoint as well, we've proven over the last 2.5 years, it's changed the conversation and how producers can talk about insurance, because now it's not just about offering a death benefit. It's also about living a healthy, more active life. So a lot of our producers that have embraced Vitality in the story have really changed their conversation around life insurance and have really incorporated this into their practice and are able now to talk to their clients about, we're still planning for the future, and this is what life insurance is intended to do, but here's a little different take on it. And it's also opened a lot of doors for client referrals. We're seeing many more referrals come back because of the Vitality program, and they're actually suggesting this to their friends and family at a pretty rapid pace, much more so than they would a normal life insurance product. So who's the right client for Vitality? Well, again, I think that a lot of people, when they hear the story of engagement and potentially wearing a Fitbit and doing some of these things, they think, well, this is going to be directly for the younger insureds, the millennials, the Gen X and Gen Y generation. And while that is true, we've seen that. You can see that 51% of millennials are very or extremely likely to wear an activity tracker to save money and make healthier choices. You can also see, as we kind of move across to the middle age and pre-retirement, so that's that 45 to 65, and also in the older ages, the post-retirement 65 plus. 87% of seniors 70 plus are physically active, with 39% of those exercising daily. And most of those, as we've polled, are very much willing to wear some type of an activity tracker or log a workout, or they're going to their doctors on a regular basis. All these things that they could be doing to engage with John Hancock and earn money. Quite frankly, as you get older, The premiums get higher, as we know in life insurance, so therefore a 15% discount in the older ages can save you substantial amounts of money, to the point where clients look at that substantial savings and say, yeah, this is something that I would very much take part in. The other thing too is that with our Vitality program, it doesn't change the underwriting. You go through underwriting just like normal. This is wherever you land. If you're a preferred risk, then you can add Vitality. But if you're a rated risk, you can add Vitality there as well. So that's the beauty of this product. It can really help to overcome an increase in a rated case, a rated situation. I'm sure everyone on the phone, if you sold any life insurance, you know that when you come in and we illustrate it standard, in this example, $3 million death benefit on a 55-year-old female, that premium's $37,600. When she was rated at $125, the premium bumps up to $41,900. And as much as I'm sure no one likes to sell to a number or to an illustration, sometimes it just works out that way. They want to know how much it costs before they get involved with the process. So we show them kind of where we think they're going to fall. They come back rated. It's more expensive. What Vitality can do is, as we add that, it can kind of overcome that underwriting decision where we think that they were going to land a little bit better off. And you can see here the premium comes back down to $38,190 if they're engaging with Vitality over the life of the policy. So this can be something where it's just a great story. It doesn't quite get us back to where we were, where we showed originally, but it can help us overcome, again, the increase from a rated case perspective. We can also, obviously, in the older ages, we start to grade down the amount of activity and the amount of engagement that's needed in the older ages. So that again just seems to make sense. So at a pace that's healthy and just makes sense for an older individual, we'll start to grade down what they need to do. But you can see that the substantial savings that clients can get at the older ages, and it really starts to make a lot of sense for our older age insureds as well. We've also just within the last year partnered with the American Diabetes Association. We pitched this to the ADA, and as soon as they heard about it and they heard that this is life insurance that will reward their clients for doing things like exercising regularly, eating a healthy diet, visiting the doctor on a regular basis, tracking their glucose level, some of those things, that is so important to track and to be on top of those three aspects of life, with especially with a diabetic. The ADA just said, hey, if they gave us the endorsement saying if you're a diabetic and you're one of our members and you own insurance, you should be looking at a John Hancock policy with Vitality. So we've been very, very fortunate. They're now sending us leads when their members call in and ask about life insurance, and so it's been just another great kind of feather in our hat, if you will, with regards to the living benefit rider and our partnership with the ADA. So, how does the program work? And again, I'm not going to get into real specifics now, and we can certainly do that after the fact, but it's quite simple. Technology now has allowed us, there's a website that you can go to track your activity. There's also an app for your smartphone that can track the activity. And you basically are engaging with us on a regular basis. You're letting us know, hey, I went to the doctor. Here's some of my very basic scores for my doctor. I'm, exercising regularly, or I'm wearing a Fitbit or an Apple Watch and getting steps on a regular basis. You're accumulating these points that you get for all the different activities. You're earning a Vitality status. As you can see here, there's 4 different statuses. Everyone starts at bronze. And then as they accumulate points throughout the year, they move to silver, gold, and platinum. And then depending on what level you're at the end of the year, your policy will get that appropriate credit, whether it's a silver credit, a gold credit, or a platinum credit, each one increasing the more your clients are engaging. And that's really it. It's very simple to do. It's very simple to track. I know that some producers are very worried about how much effort it's going to take to track. And quite frankly, once there's a one-time setup of a Fitbit via Bluetooth to a phone or an Apple Watch to a phone, once you do that one time, then your clients are off and running to the races. And by the way, we do have a dedicated Vitality help desk in Chicago where they really take a lot of that burden. If there is questions from your clients on any of that kind of stuff, we suggest you send your clients directly to the Vitality help desk, and they'll help get a Fitbit synced up or something like that. That way, you don't have to be a master in setting up the technology, and we can keep you doing what you love to do, which is talking to more clients about John Hancock Life Insurance with Vitality. As I mentioned, we have partnered one of the only carriers, or the only carrier in the life insurance arena, to partner with Apple to offer deeply discounted Apple Watches. We do send out a complimentary Fitbit. We've got the healthy food. We've partnered with Hyatt Hotels to get 50% off Hyatt Hotel stays. We've partnered with a number of different cruise lines to give 50% off cruises. We give free health checks at Walgreens and Quest Diagnostics. So John Hancock will actually pay for your client to go in and get a health check once a year. And again, that's very basic information. It's glucose, blood pressure. We also will check their height and weight, or their BMI, and then finally their cholesterol levels. And based on those, they get big points for doing that on a regular basis. We've got partner gym discounts for different gyms across the country, like Lifetime Fitness and some of the different bigger box gyms, and then gift cards through Amazon and iTunes and Starbucks and all kinds of things to reward your clients on an ongoing basis. The Apple Watch, it's $25 plus tax when you purchase a John Hancock policy. It's available on all of our policies, whether it's term or permanent insurance. And then what we do is we put the remaining balance of that watch on a 24-month payment plan, interest-free. So I actually own a Vitality policy. My monthly Apple Watch is $15.50. That's how much I pay for my watch. And the more exercise I do per month, that payment actually grades down, and John Hancock will pick up the balance of that. So my payment can go to $12 to $7.50, and then obviously down to zero. And so, depending on the month, how much exercise I'm doing, I'm getting my Apple Watch at a great discount. My wife works out a lot more than I do. I don't think she's had a payment yet, because John Hancock has picked up her payment because she's working out on a regular basis. And it works. It actually it shows that if people are tracking that, they're actually taking more steps per day, and typically living a healthier and active life. For you as a producer, it's really impressive and amazing what just this partnership with Apple has done, as far as talking to their friends and family members, coworkers, about how they got their Apple Watch for a great discount, and now it's tracking their fitness levels on a regular basis. They don't have to do anything. They can show them the Vitality app that they have for their smartphone, and then they're getting giving a lot of referrals to our producers who are selling the Vitality product. You can also see that, as I mentioned, more steps per day. They're twice as likely to log a daily activity on their Apple phone, and actually 50% of our Vitality members who own an Apple Watch have zero payment each month. So this is something where it's not, a lot of times producers say, I'm sure it's very difficult to get down to that zero payment. That is not the case. We're finding 50% of our Apple Watch users are actually saving the full payment amount, and John Hancock's picking that up for them on a regular basis, and they're using the watch 6 out of 7 days a week. We've also partnered with Walmart and any NutriSavings grocery store to give back $600 up to $50 per month in qualified healthy food purchases. So now when you go to Walmart, for example, or any of the Walmart, the neighborhood market or the superstores, and any NutriSavings, depending on what market you're in, a number of local grocery stores are part of this NutriSavings umbrella. They go in and do that shop. Your clients can go in and do the shopping. If they're buying whole grains and fruits and vegetables, what would qualify as healthy food, they're actually saving 10 to 25% on that healthy food, up to $50 per month. And again, this is if you've got a term policy, a permanent policy, doesn't matter. We've got 16,000 participating stores. And when you can talk to your clients about that type of a benefit as well, and saving the money at the register when they're buying groceries, again, just something else that is very important to them, and you're helping them with a great need. And over the course of the 2.5 years that we've been doing this, one statistic that I'd really like to show is on the far right-hand side. Engaged clients, before Vitality, or if we sell a policy still without Vitality, we're getting basically one engagement point per year, and that is we're sending your client a bill, and that's really all the engagement they have with their insurance company. Now when we sell a Vitality policy, we're seeing engagements of up to 22 times per month. So it's policy holders who own a Vitality policy are much more engaged with us at John Hancock, but obviously they're thinking of you as their producer, because you sold them this policy. And it's, again, all about prevention, online education, physical activity. An engaged client, as we always say, is a happy client. But you can see that we're leading, these leads to larger policies. If they're getting a discount, sometimes we can sell them larger policies, 60% fewer policy cancellations, and quite frankly, our Vitality policy holders really like their Vitality policy, so they're buying more face amount, and it's engaged the other spouse, typically maybe the non-working spouse or a working spouse. This just gives them the opportunity to talk more about insurance and get in and sell them. You can see we've got a lot of producer testimonials. We've got a lot of these, but the one I like is the one that's highlighted in orange. You know, something new and different to talk about, gives me an opportunity to discuss a life benefit instead of just a death benefit. And our producers are all saying that these are, this is a game changer, first product that individually addresses the needs of persons purchasing insurance, which we couldn't agree with more. And it's simple, nothing to sell. It was simply a matter of knowing my client and letting him know that Hancock could reward him for doing what he does every day. Again, I can't stress enough, this isn't for people, just for people who are running marathons or who are running triathlons or for former professional athletes. This really is for people who are doing things, maybe they're gardening, maybe they're golfing on a regular basis, just getting some activity. They're going to be able to be very successful with the Vitality program. Real quickly, I know we're kind of running close on time, so I'm going to just go through. We do a producer Vitality report. So your clients, every month, you'll have the opportunity to go look at where your clients stack up. And again, you can see on the far right-hand side, they're gold, or if they've signed up for the website, or if they've ordered their Fitbit. That way, you can kind of track their Vitality status and reach out to them on a regular basis if you'd like to build that into part of your practice to really help support the Vitality story. There's also all kinds of engagements. We have a quarterly newsletter that goes out to your clients in print. We've got the website. We've got the app you can see in the upper right-hand corner. You can see the discount that they get at the register for buying healthy foods from a Walmart receipt. There's just so many things that we're offering our clients now. It's no wonder that we're getting this average of about 22 interactions per month in some way, shape, or form from a Vitality client member. And then you can see as we go through, we also have something we call our Life Track Communications, which we're going to send this out 30 days prior to the policy anniversary. That's so that your client can see in plain English how this Vitality status will affect their policy. How much of a discount are they going to get? What things could potentially change, and how's that outcome going to change their bill when it comes up 30 days from then? We're also going to make those communications available to you as the producer, so you can really run what we kind of consider an annual policy review without having to order in-force ledgers. So this is a personalized annual report, and it also really becomes a dynamic bill at that point, as opposed to what we've had in the industry before this, which is always just kind of a static bill. This is going to be much more dynamic and help your clients stay on track, but also help you keep them on track if you'd like to do that and build that into your policy, into your practice. So to wrap things up, the best part about these three benefit riders that we've talked about, the living benefit riders, so our critical illness rider, our long-term care rider, and our Vitality rider, is that we can add these all three on at one time. So again, that same client that we looked at earlier that added the critical illness rider, so if they have this $1 million policy on a 55-year-old, their protection IUL premium is $10,779. If we add the 10% or $100,000 critical illness benefit rider, it increases the cost up to $11,901, as you can see here on the slide. And then if we add Vitality and they engage with us and get to the gold level, which isn't even the highest level, it gives them about a 10% savings. You can see that brings the premium back down to $10,890, which is not quite where we were to start, but in a lot of ways you could look at this, say that this will, by them engaging with us on the Vitality benefit rider, it's actually going to bring the cost down to where, very close to where it was prior to adding the critical illness rider. So it almost pays for the critical illness rider. We take it one step further. We not only add the $100,000 critical illness, but we also add a 2% long-term care rider. You can see that cost goes up to $13,295. But again, adding the Vitality rider now we bring the cost of that policy back down to $12,200. So again, can give them some savings. Doesn't quite pay for both riders, but certainly helps out. Gives them a lot of flexibility and a lot of different living benefits on their rider that they'll be able to use not just at death, but also at life. Okay. So with that, I will. I know we're getting very close to the hour. So in the effort of keeping everybody on time, I will, Adam, maybe just turn it back over to you. And if we have any questions or anything that we need to do to wrap up, I'll let you go ahead and take back over.
Great. Appreciate that, Chris. Thank you so much for taking us through that very compelling story with those riders, especially Vitality. So I do appreciate you taking the time to go through. Did have a couple of questions that came through, going to touch on in the interest of time here fairly quickly. But first of all, are these benefits, I know it might be a little difficult, Chris, but are these benefits all available in New York? I know John Hancock has product in New York, but as far as these riders and these benefits?
Yeah, so that's a great question. We'll have to, what I'll do is some are and some aren't. So maybe what we could do is we could provide our state availability chart right after this call to those who've inquired about that. And I just don't have that at my fingertips. I'm sorry right now.
Nope, that's just fine. Kind of the case. We know that gets a little tricky, so I figured I'd start off with a curveball for you, Chris. So
yeah, that's right. That's right.
The last one I'll touch on here. Again, we are at our time, but with the Vitality program, certainly a compelling story in reducing premiums potentially. But what happens if something happens and the client's not quite as active? And they go down a level? Will they actually see their premiums increase?
Yeah, that's a great question. So it really, the answer to that question, and this will sound like I'm dodging the question, but I won't, and that is that it depends. It depends on how we illustrate it, because we have the ability to do it one of two ways. One way we could do it is we could illustrate it showing and giving them that discount right out of the gate. So let's say you've got a $1,000 premium. Let's say we're going to illustrate it at a gold level, because we know that that's a very attainable level for that client. They're out of pocket right out of the gate, maybe $900, because we're going to save them that 10% right out of the gate. And then the question would come up, okay, what if in that first year they don't hit the gold level? Could their premiums go up? And the answer is yes. In that situation, it could go up a little bit. It wouldn't be a substantial increase, but it would go up a little bit. We can illustrate all those different scenarios and show you how to do that, and we'd show you what that increase would be. The other thing, though, that we could do is we could actually illustrate it at the bronze level. So basically, when we do that, we show them and say, "Hey, look, we're not going to assume anything. We're going to assume that you're going to pay the full premium. But then, if you do engage with John Hancock and Vitality, then the only thing that could do is bring your premiums down." So we really have two different ways to do it, and just kind of depending on the client and do we think they're going to engage? Yes or no? And from that perspective, if we've got someone who we think, you know what, they may give it a try. They certainly want to, but I'm not sure that they're going to, illustrate it. Then they would just pay that normal premium plus the cost of the rider. And I didn't mention that when we add it to our permanent products, it does cost $2 per month or $24 per year. But they can drop that at any time. So maybe give them a couple years to try to engage, see how they do. If they like it and they're enjoying it, you just keep it on. If they don't, then we just drop it at any time, and we'll stop the charges, that $24 cost at any time. But they'll notice that if they keep it on there for a couple years, they haven't used it, and then maybe in the 4th or 5th year or the 10th year, they come back and they have a life-changing event. They say, okay, my daughter's getting married this year. I want to take the opportunity now to engage with Vitality and lose my 10 pounds, or whatever the case may be. All these things happen in life. If they engage at that point, they're going to see their cost of insurance, and that credit is going to greatly. Typically it's a lot more than just the $24 that they've been carrying. So we encourage clients to really, even if they don't think they may use it right away, the $24 cost is not that much, and they may want to have it on there kind of for a rainy day, so that way they could start engaging at some point later on down the road. So again, we can show both ways, and for some clients, it just kind of depends on how we want to illustrate it. But the answer to that is we don't have it doesn't have to go up. We can show it and illustrate it, so it's always going to only be able to help you.
Great, good deal. Well, I think that is going to wrap things up. Chris, thank you so much again for taking some time out, and thank you everyone for joining us this Monday morning. We'll be following up with everybody after the conclusion of the presentation here, see if there's any other additional questions that may come up after the fact, see if I can get some additional information. And of course, always eager to help you with your casework out there. So thank you again, everyone. Have a fantastic rest of your Monday and a great week, and we will be in touch soon.
Sounds great. Thank you. Have a great day.